All right. Good morning, good afternoon, and good evening, and it's the middle of the week already. It's Wednesday, and because we had off on Monday, it makes it a nice short week. Makes it a lot easier, that's for sure. All right, let's see what's going on this morning. The equity markets seem to be kind of okay. You can see the Swiss bounced off the green line again. Where's that mouse at? Right there. You see that? It bounced right off of it. It just is what it is. And you can see over here, Chicago J4X, same situation. The white line is piercing up. We're even getting a green hinky. It's just that's the action we're seeing there. Let's see what's up with that. Why can't I get that? There we go. You see we got a red and a green on the Chicago Quant. We have none on Tuesday at all. It battled its way into the buy, and now it's flirting with the sell. So let's put that in there. So it closed in the buy there last night. Last night, and it's still in the weekly buy since the 91ish area. We're not really that high up, 91.90. It's just a little action there, less than one. I guess it's like around 1% overall. Product bounces in between those ranges, and it doesn't seem to have much of a. There just doesn't seem to be any conviction. I think that's the best way to describe pretty much the whole market. The reporters or the talking heads, I guess you call them, on the financial networks are starting to say things like, well, it's only down 1.25% or 1.125%. And then I saw one of them trying to describe when the Dow Jones Industrial Average was down 500 points in 1987, right? That was 87, so it's at 13. That's 35 years ago, okay? They're going, well, that was a 26% drop. And now we're down 600 points, and it's only like a 1.25% drop. And it's like, wow, it took 37 years for them to figure that out. I just shake my head. Only took 37 years to realize that when you report a percentage and a actual change, like 500 points or 300 points, and you report the percentage, obviously if you're down 26%, that's definitely much more bigger than when it's down 1.25%. So 26 versus 1. Hmm. Anyhow, that it always makes me laugh when they show the lack of coherency of the marketplace itself, and these are the people a lot of people are quoting, and they're listening to and so forth. But to actually hear someone actually rationalize it live on TV makes me really, really laugh. And it's like, wow, welcome to the party. All right, so there you go. You can see the Swiss is, doing its little thing here. It's coming off the lows on the J4X. You can see that there. And the only other way to describe it is that the markets themselves are just trapped in very tight ranges. And as an old trader texted me a couple hours ago. Let me think, what did they say? Let me go read the email again, and I'll read it out loud to you because it kind of emphasizes the attitude about it all, I guess. And let's see, where's that? Is that it? No, I think I trashed it already, but let's just go take a look at it. There it is in the trash. Talked about the idea that there's at 1 o'clock Eastern Standard Time here in the United States, there's a $51 billion 5-year note auction. And my response to him was, well, if not many people buy it, the Fed will buy it. So what's the difference? No, it's. Now this is an old trader that taught me concern about the irresponsibility of the Federal Reserve some 40 years ago on the trading floor. And said to me, the world, we can't afford the world to lose confidence in the Federal Reserve and the Fed balance sheet and the United States overall. And here we are, 40 some odd years later, 42 years later. Him texting me and saying, we're going to have a bond auction at, of 5-year notes, $51 billion worth. And what's the difference anymore in the era of quantitative easing? I guess it's the same way. In many ways, a lot of the old traders just cannot accept that there is quantitative easing. They just don't even look at it. They just don't even, they don't acknowledge it. They don't say, oh, this is really strange. The Federal Reserve buys, 2/3 of the auction or half the auction. Whereas before, the Fed, when I was on a trading floor and this trader was teaching me the market, they would have thought that if the Fed bought even $1 of that bond auction, we would lose credibility. I'll take a sip of the tea after 5 minutes of talking. And that's something, just the way it goes, it's just the way it is, I guess, And this is the era we're in, and I was watching, matter of fact, I was looking at some of the amount of debt all the other nations are in over the last, I guess you could say the last 24 hours. I was reading something, and it was explaining, like what Greece is in debt, how much they're in debt, how much to their GDP, how much Germany's in debt to their GDP, same thing in the United States and so forth. So, we have a $23 trillion economy. That's our GDP, and we're in debt by the Fed balance sheet is $30 billion, and obviously we have other obligations domestically, but $30 billion overall. So that makes it a 1.3 ratio. Germany's in debt to its GDP by 71 times. We're in debt for 1.3 times. I think it was Greece was 190. Italy was 250 times. So I guess, as we always say here, we are the cleanest of the dirtiest shirts in the laundry. It's pretty much the way to look at it. All right, from there we'll jump over to the cable, see what the cable's up to this morning. Not the cable, I'm sorry. Let's go euro first, and then we'll go cable. There's the euro. Euro is trying to get back into its buy. I think we sent a chart out showing the green line there, so we will throw it up there for the time being. In fact, I might just put it there, and then this way I save it, and then tomorrow when I open it up, and it's still in the green, I can keep it there because I don't send that chart out. So we'll just go to save there. So what it's doing is it's trying to go into the buy as we speak. It's been playing around with this 50 percentile of the range now for months. And it goes up and hits it and then falls back down a little bit. But it's not really, going anywhere. It just does that stuff. It's they all stay in their ranges pretty comfortably, which is oddly surprising in some ways, and obviously in another way, being in a quantitative easing era where the central banks run the whole marketplace now, it's not that surprising at all. Someone's handed them a John Murphy technical analysis book, and that's what they do, is they trade by it. I'd imagine there might be a John Murphy technical analysis book literally stationed on every trading desk in the Federal Reserve across the United States, wherever a Federal Reserve office is. They probably have a John Murphy technical analysis book. They probably follow it to the letter because it seems like the markets follow the rules really well now. All right, let's check out from there. You can see on the J4X, same situation. We're bouncing up. Oh no, we didn't move it over yet. Let's do that. Right there. Little green hinkies kicking up. You see the white line moving up. So the pressure is on the upside. And that's what we're seeing there. Pressure on the upside. And from there, we take a look at cable. We wrote that article about the cable yesterday that got published, so that's pretty cool. Where's that? Right there. There's cable. Now on J4X, you can see we got a green hinky, but the white line is broken down. And then over on Chicago Quant, you'll see it's picked right back up again. It's through the zero line here. And you can see the weekly is through. So we're starting to see that strength. They have to take it down to take it up. Maybe this was the down right there. And that's normal the way it usually functions, is that they like to take them down to take them up. I know that sounds a little odd, but what it really comes down to is that the way to, for trading desks and institutions, when they need inventory, you know, and they look at a lot of this stuff as inventory. What they'll do is they'll try to sell out some of their longs, try to press the market down a little bit, and then step back up and buy, hope to buy it lower than where they sold it, and then watch them take it up. I hope that makes sense. I think we said that in the article there. Let's see. All right. Let's see. I just took a vitamin. That's about it, I guess. You can see it here. It may go challenge the green line. That would be nice. What is that green line? Green line is the 136 and a quarter area, basically. And that might be the next, you know, on the J4X. I might do that curve, you know, the William O'Neill handle right there, and then start to turn back up and take off. We'll watch the Chicago Quant. That'll give us good solid logic and direction. And you can see right there with that weekly playing on the plus side with all three now. That's a pretty positive sign right there alone, where we have to start assuming that we will see some strength. And then, you know, the war has not broken out. There must be some. I myself really have my question marks about what Poland and Hungary and Romania will do. I don't know if they're that excited about the idea of letting the Russian Federation just slowly move back into any of the countries over there. So I would not, if I was Mr. Putin, I think he's won what he wanted to win, and the smartest thing he could do now is to just step back and let it be. Because I'm not really sure if he has to worry about, we know that he doesn't have to worry about Mr. Biden, but he may have to worry about some angry old family members from Poland and Hungary and Romania that may not want to put up with his shenanigans. And they're not flying MiGs anymore. They're flying Phantoms. And we all know that the ratio to success of a Phantom against a MiG is a real high number. So I don't know if they want to play with them. So we'll see. All right, from there, that's probably the peace thing really going on right now. We're probably, you know, the war is probably over with at this point, and now it's just a stalemate. And maybe that'll put some push into selling dollars and buying some of these other currency pairs. And maybe that's exactly what we're seeing here with some of these products. And the only one that really surprises me out of them all is the Swiss, where the Swiss is kind of vacillating more than the other two. But let me just go back. That's the cable and it's punching through. Is the euro punching through the weekly? Yeah, the euro is doing the same thing. It's trying to punch through again. So I'm not totally convinced that the dollar is going to be bought heavily. I've been saying that for a while. I kind of think they're going to just keep it in its range. It's like everything else. Everything's in their range. That's pretty much the story of it all. All right, let's go check out one of our favorites. What a lot of times we used to refer to it as dessert, and that is, let's take a look at the Turkish Lira. That is a fascinating product. I mean, they've given these puts out now, and it looks very stable. Yeah, look at that. At the top end of the range, it's trying to go pierce this area here. In a very short-term basis, I mean, you know, when you shorten it up, they'll only see a month and a half, you can see it's still not taking out these highs. Boy, what a big difference that is, you know? I mean, they've gone from a very irresponsible currency to a very responsible currency. It took a while to figure it out, but they finally figured it out, that's for sure. And you can see here on the Chicago Quant, you know, we've been in a daily buy for 4 days now. You know, it's pulsating along, it's, you know, looking firm, it's playing against the numbers. It's trapped obviously in this big box that we've put up there. And you can see the weekly is even holding up in the weekly, so there's a little firmness there. Let's see if it does this thing where it was in a buy for a little while and rolled over again. Now inventory may really rule this more than irresponsibility. That's the really nice thing, is to see inventory, the supply and demand control a currency more than government policies that really wreak havoc. And you can see here we've been in a daily buy on this for like going up 1, 2, 3, 4, 5, 6, 7, 8, going on 9 days we've been in a buy, and the weekly keeps on holding up. It's trying to break down, but it hasn't. And we're still trapped inside this nice big old box that we've created here in the yellow. And it's banging up against the trading range of what we thought was a solid area of resistance. So they, by the government and the central bank giving out puts, free option puts to any purchaser of Turkish Lira, that is a very positive stabilizing force with the currency. And in the end result, when watching inflation, probably the greatest thing of all is just stability. Your currency being stable, not going up 10 or 15 or 20% in a 2 or 3 week period, the way the Turkish lira had been marching back and forth for months and years, up and down 5% and 10%. That's a tax in its own right. The idea that now they give out a put and they just create a tax to pay for the put is a lot cheaper than exhausting central bank reserves and sovereign fund reserves. And it just makes it a whole different, more responsible level of central banking altogether and government policy. All right, from there we jump over to the Canadian. Look at that, dropping down a little bit there. That's nice. Didn't go take the top of the range at all. We're still in that weekly buy, and it's really just sideways chop, but we'll follow it and we'll see. From there, normally that's a sign that oil and gold are going up. So let's take a peek at oil and gold real quick and see what they're up to. And there's oil, and you can see it here. It's unched, and just kind of cruising up. And we will show you on the J4X when we get back over to the when we finish off the rest of the currencies. We'll show you that. But I want to keep the Canadian up there for a little bit, just to get a flavor of what's going on there. There's a Canadian trying to move down. And as we are on Chicago Quant, doing the same thing, trying to move down. So we look at the metal and the oils complex, and you can see here, oil is trying to move down, go up, what it's supposed to do. It's supposed to lift. And then let's take a look at gold, right below it. Gold is pretty much unchanged too. It's not giving up anything. It's been in a buy for weeks now, 2, 3 weeks, like almost 3 weeks now. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's 2 weeks right there, and then 1, 2, 3, 4. It's like 3 weeks now in a weekly buy. 5. This is 15 days now in a weekly buy, daily buy. I'm sorry, daily buy, matching with the 3 weeks. We're in the 3rd week of our weekly buy. So with that strength, we see the strength of the Canadian. In other words, it moves against the dollar better. So when the Canadian goes down and the dollar, that means the dollar is going up against it, which means it's losing value. So there's less Canadians to a dollar. So that means that it's more expensive. It means Canada is benefiting. They need less Canadians to buy something in America. All right. From there, we assume, because of this kind of sideways up, we're going to see a sideways in the South African rand. And we're lower than yesterday. And you can see it's flirting with a sell. And we are still underneath in the weekly. So the pressure is there. Let's take a peek at it through the eyes of J4X, right there. same situation. We got some red now compared to a couple of days of the green. Seeing that pressure push. You know, it's a again, and that could be literally, this product could be the same way. We have never really looked at the range, but I think the range has been wide in this product. I think it's been in like the 12s or 13s all the way up to the 17s. We can take a look on J4X real quick. Let's do that, just for interest's sake, if nothing else. Let's go with a monthly chart. Make it the whole page. Let's see if there's an actual range that we've been not paying attention to. Now it goes all the way back to 12. So yeah, there's the, it goes back to 2012 too. But you can see here, since the quantitative easing era, they allowed it to climb up and then it seemed to fall back down and then get trapped in this, what's that? That's the 16 area. And I guess at some point or another, maybe that was Mr. Biden. No, that was the coronavirus. That's what that was. That right there freaked it out. And now it seems to be back in that range, and maybe that's what the range will be. It'll be between 16 and say 12 and change. You know, that 4-point handle. And you can see here it's trying to roll over on a monthly basis, and we're generating a red too. That's a good possibility that that's the range, is between the 16s and the 12s. And the only thing that pushed it out of it was that February-March explosion of the world closing down. Hey, Robin, how you doing? Ask Doc some questions. Answers. He won't find anything more accurate. Oh, that's so nice of you to say that. I appreciate that. Yeah, I would love some questions. I'm just kind of floundering along, just looking at all the products. And there's nothing better than questions, because it makes us all explore new ideas. And in a world where we have to be proactive and not reactive, it's really good to do that. Good. Glad all's good there. I hope you've had a nice breakfast. Let's see. From the South African Rand, we'll jump to the ruble. That is like the heartbeat of all this noise right there. And the ruble has jumped back into that buy, and they're not letting go. And it's been in that buy since they tried. You know, I guess this was like a hope, this area here, about 5 weeks ago, that there wasn't going to be a problem. And then they realized, oh, well, I guess there's going to be a problem. Mr. Putin is definitely going to find a way to rattle Mr. Biden's cage. I mean, he did that back in 2014 when Mr. Biden was the vice president and he was involved in the whole foreign affairs thing. And now he's doing it again now that he's president. So this is kind of funny. We're sipping our tea here. You know, Mr. Biden, I guess Mr. Putin basically has, as they used to say, he has Mr. Biden's number. He knows what it is, and he knows how to rattle him and disrupt him. And the sanctions were not. I understand that. Let me just stop right there. I understand that the Russian index at the exchange in Moscow had been down 19%. And then after Mr. Biden spoke yesterday, it was up 6%. So they had a 1/3 retracement right back up. So whatever Mr. Biden did, the marketplace was anticipating, you know, the problem. In other words, they anticipated he was going to do something. But obviously they thought, wow, that's not too bad what he did. I think he sanctioned a couple of people, and he promised not to allow them to loan money to somebody or another. I don't know. Nothing particular. All he has to do, you know what would really hurt Russia more than anything else? All he has to do is just let us go back to being the world's producer of oil again. We do that, all of a sudden, instead of that billion, and was it Giannis, the head analyst here at Dukascopy, said that Russia is making something like about $1.25 billion a day from the price increase. And so, and he said the defense budget is $48 billion. And he says, and here now they've made over $62 billion extra in oil since they started this stuff. So they paid for their defense budget for the year. I mean, this literally could be nothing more than that. and he takes over those two little provinces, drives everybody crazy, but he doesn't go any further, and he just acts like he might, and he keeps oil at a higher price, and they just rake in the dough Ray made. But if Mr. Biden would let America start producing extra oil again, which he won't let us do, then all of a sudden the oil prices drop dramatically, and Russia doesn't make that extra money. So Mr. Biden really doesn't understand any way of dealing with Mr. Putin. Mr. Putin. Matter of fact, it was really interesting. They showed a picture of Mr. Trump meeting Mr. Putin, and the two of them were standing, walking onto a stage, and Mr. Trump stopped at the center of the stage, and Mr. Putin was walking towards the stage, and Mr. Trump reached out and shook his hand, and you can see they slowed down the motion, and you can see he pulled Mr. Putin to the center of the stage. He actually pulled him, and Mr. Trump did not move. And they said, now there is a world leader showing another world leader that he's not intimidated. Now, they showed another picture of Mr. Biden recently, I guess it was about 6 months ago, when him and his wife met up with Mr. Putin. The president's wife and him 6 months ago in Brussels, or I don't know where they met. They met somewhere, France maybe, something like that. End result is that it was one of those G7 meetings type of things, and Mr. Putin is looking at the camera, and the camera picture has Biden looking up at the sky and looking lost, just totally lost. And that is obviously the difference between the two. So, I mean, if Mr. Biden actually wanted to punish the Russian Federation for Mr. Putin's actions, all he has to do is say, hey guys, start manufacturing more oil and get us back up to the extra 3 million barrels under Mr. Trump that we used to produce. And that would do it. You don't have to do any sanctions. Just take away the big oil dollars from them, which in many ways would also lower the cost of oil here in the United States. Just shows you the difference between a really competent leader and one that doesn't really understand what's going on. All right, from the ruble, and we are very bullish all the time. Our hearts are always bullish on the ruble. We think the ruble should be lower, not higher. But our math says the opposite, and it usually is right. I mean, the last time it went into a weekly buy was back in November, and ran all the way up. And then they looked like they were going to resolve issues, and then they sold it back down again. And now, it's doing it again. They're doing it again. Let's see if I go like that and widen it like that. There we are. Does that do it? No, this way. There we go. And so, that to me, the ruble, I think the highs is like in 83s or 84s, and they are dangerously close to flirting with those highs, all-time highs again. All right, from the ruble, let's jump over to the Japanese yen. Oh, and just real quick on the J4X, let's put the ruble up there too, right there, just to get a flavor of it. Yeah, see that? It's going after some highs here. And the last time we saw those highs was back here. That was the all-time high back in, I guess it was 20. Let's see, what did they do? 2014. I guess I would think it would be 2014. Let's go back to 2014 real quick on a monthly basis to see what the all-time high is. That was when he invaded the first time. And he really tricked Mr. Biden then. So there's 214, and we're playing with the 214 area. And going into 2015, 2016, they made all-time highs. And I guess maybe they're going to go do that stuff again. I mean, maybe that's what it's all about. There was the invasion into Crimea, or whatever you want to call it, and then you can see a year and a half later, that gets punched up, and then Mr. Trump wins the election, and then you know, the COVID thing, and then he loses the election, and you can see there's the Biden era now, where it was going down a little bit, and now it's popped back up again. All right, and there is the yen, the dollar yen. And there's a dollar yen there. You can see it's perked up. It's in a daily buy from yesterday. We're in a weekly buy for a couple of weeks here. Oh, wait a minute. Where's the line at? I guess I'm waiting for the. Yeah, it's in the 3 is in a weekly buy. And we keep on wondering if when the blue takes off, will we go and see, like, you know, 5-year highs from it? That's what we're thinking. And so we're waiting for that takeoff of the 5 part of the Super 3.5. That's the blue dashed line. Thinking, okay, when this takes off and closes in the weekly buy with it, that might be the beginning of the launch on the upside. And when we, like it did it here, it's in a weekly buy here, and the moment that the blue takes off, you can see we start to get a 2-week move on the upside nicely from the low 114s to the high, or to the low 116. So 2 full handle move. And same thing here. It happened here and takes off. So we're watching that real closely. Yensky. All righty. From there, we go to our very last product that we look at in the currency market, unless someone asks for another one. Actually, we don't. I always seem to want to drift over and see what Gbp Jpy is doing. So what we'll do is we'll look at the Mexican peso. We'll look at that, and then from there we'll go to Gbp Jpy. I like looking at that. I find it interesting. And you can see here, it's just still drifting down to the low end of the range. You see it there on J4X too. I'm sure it's aiming down. There we are. Boy, it's buried down there, isn't it? Just bouncing around. Look how high that went compared to this high. Almost identical, but look at the difference. Very weakish compared to that. And there's the Mexican peso for you. Just cruising along. All right. From there, let's jump over to. I just want to see what the Gbp Jpy is doing real quick. Right there. Trying to lift up, isn't it? And the weekly's trying to lift up. Both are firming up in here. Okay, interesting. All right, from there we'll drift over to the metals complex. Let's put gold in. Since we didn't look at it before in J4X, you can see it's trying to do this little topping out. We got a little red going on there. Over here on the Chicago, we got the same thing going on. We got a little red dot going on in there, but it's holding up very well in the weekly and the daily. Not that well. It's holding up great in the daily. On the weekly, it's just in a buy still, and you can see it's broken the time manifold there. So we'll see if it stalls out. I guess if we get some sideways to up action, that'll start to lift this a little bit. And we're looking at what the $1,900 area seems to be the top of the resistance area. And I guess that's like a couple hundred points off of the all-time high. I don't expect to see it get to the all-time high unless something really hinky happened. But I don't really think there's going to be anything I think we may be seeing the end of this whole Russian-Ukrainian calamity. It'll just now they could let it go sit for another 3 or 4 years, and because I don't think, like I said, I don't know what Poland, Romania, and Hungary are going to do, but all three of them are NATO countries now, and if they feel threatened, let's put it this way, the three of them can control the canopy over Ukraine with no problem whatsoever. And if the Russian Federation doesn't control the canopy, they can't advance any. So, in military terms, we have to see what occurs next. But, I'm wondering if they even attempted to do something, they may declare a no-fly zone, the three of them, and say there's a no-fly zone over Ukraine. I don't know. I'm curious. I have not heard anything too intelligent. I've only heard lots of political spin. But if I was involved in it on a military level of consulting and so forth, I would say the way Poland, Hungary, and Romania go is the way Ukraine goes. And so we've seen an enormous amount of activity in those three countries, beefing up defenses and so forth. So I'm not too convinced that anything else is going to happen. So we'll see. See if Doc is right or wrong. Time only tells. Time is our friend, Okay, from there, let's take a look at silver. There's silver holding up too. And unfortunately, the weekly is bending over and breaking the zero line. That's why we have the little pink dotted things going on there. Daily seems to be steady. That's about it. It's actually almost plus for the day. And there it is on the J4X, looking the same way, very firm. Top end of the range, but still very firm. Trying to roll over here with that signal. We'll see. Our daily here is not breaking, so we'll see how that plays itself out. And then from there, we'll go over to Mr. and Mrs. Copper. And you can see copper is in a sell for a couple of days, since Friday of last week. And at the same time, it's trying to lift up. And you can see we've been in a weekly buy now for 8 full weeks. We're on a 9th week now in a weekly buy. And we really do think that copper is trying to tell us things about inflation more than any other product, more than silver, more than gold. I think it's copper. I think copper is really trying to tell us something. Every time there's like a chance that maybe inflation is not that aggressive, we see weakness in copper. And every time there's some talk of possible more inflation, we see strength in copper. In this case here, it's really lots of sideways actions through it all. There was a lot of sideways action, and it sells off a little bit, and then spikes up again. Then sideways action for 4 or 5 days there, and then spikes down again. Then another one spikes back up, and it goes another 4 or 5 days of sideways action. Lots of sideways action in this product with a spike. Spikes down, spikes up, but it's definitely that sideways action and then spike. And it's usually 4 or 5 days it seems to play itself out. Now, here we are, since that last spike down, it's at 4 or 5, 6, 7 days in this really tight range, going from a daily buy into a daily sell, going almost nowhere really. Very tight range. So we really think that copper is trying to tell us something about the inflation problems. And then I heard someone discussing the supposedly Mr. Powell, I think, speaks next week. And so, I can't imagine him being he won't be provocative on any level, or he will not surprise the markets on any level until they swear him in, until he gets his next 4 years. So he's sitting there in limbo at the moment. And with it, we don't see a price increase. And you know what? That would not surprise me if these politicians in Washington are just going to play the game so that he can't basically raise things. At this point in time, Mr. Mr. Biden's appointees are all stuck in limbo. He doesn't really have the power to do what he wants, and that's why things have been kind of stalled. And the closer next month we start elections for the fall elections, the what we call primaries, to see who the main candidates will be. And so the closer you get to elections, the less elected officials want to do. Politicians will do. They try to dodge doing anything that can get them in trouble. And so they wanted to pass all these people at once, like 5 people at once, and it's not going to work because some of them are really very counter to economic stability. And so they've chosen not to appoint any of, let's say, approve. They have chosen not to approve any of them at this point. And until they, go get deeper into this, they can't do anything. And so without him getting sworn in, we don't see price increases. And remember, at this point, the Fed rate is 0, right? So if the Fed rate is 0, and they're going to do 5 or 6 or 7 increases, allegedly they were going to do 4. Some say that it could be 7. They're talking about quarter-point increases. Even if you did 6.6 quarter-point increases, you're only looking at 1.5. I mean, that's not a big number. It's just that governments have gotten comfortable being able to borrow money for free. And that's a freaky thing, is that in Europe, not only do they borrow for free, they get paid to borrow for free. So the central banks are getting paid. The politicians are basically being paid to borrow money. That's not a good thing, obviously. Definitely not a good thing at all. All right, from there, we're going to jump over to, let's see, we did copper. Let's see what platinum's doing. Platinum was the best performer of the metals complex for the last couple of weeks. There it is there. Just holding up at the top end of its range. It's the $1,100 area, basically. And it's been in a daily buy for a bunch of days. What's it? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, just like gold. In a long running stand, and say weekly wise, I mean, geez, look at that. And a buy, for 2, 4, 6, 8, 9 full weeks in a weekly buy also. All right, from there, we're going to jump over to the energy complex. Let's see what oil's doing this morning. And there is the Texas Light Sweet Crude trading at 91.66. That's the spot month. There it is right there. You see 64s are offered. You see Dukascopy's got 64s offered too. 62s are offered. We have 59s are offered. 60s are offered. It's bouncing around. And we've been in a daily buy for almost 8 days now. And a weekly buy for 2, 4, 6, 8. Going on 9 weeks now in a weekly buy, just like the platinum. And I guess what we'll see now is that's the next action we'll see. We'll see that type of marketplace going, where it. I guess we'll see oil kind of stay firm. I don't see any particular reason. Like I said, if Mr. Biden really wanted to stop all this violence, all he has to do is allow Americans to drill for oil again in America. That's it. It's just a sign of a pen. And he just won't let that happen. So we're 3 billion barrels less than under Trump. And that's what's putting the whole pressure and making Mr. Putin richer and richer and richer. And like I said, there's a great chance that this is literally nothing more than about money, not about geopolitics whatsoever. All right, from there, let's go take a look at. See what Brent is. There's talk of Brent getting up to the 99 area. You see there, it's trading at 96.70 basically, 96.65 area. We don't have a Brent chart for Chicago, so we'll just look at the J4X. But Brent is looking very comfortable, and they don't seem to want to let go of it. And as long as Mr. Biden refuses to increase U.S. oil production, no reason to think that it will move down. From there, we'll take a look at natural gas, and there is that the U.S. That's U.S. natural gas. And Nord Stream and all that other stuff that's going on with natural gas, and there it is right there. It's in a daily sell for a couple of days. Today we're getting a volatility signal. You see that red and green dot there on the Chicago side of it. And then what do we have there? We have, it's 3-4 weeks in a weekly buy, but it hasn't gone anywhere really. It's just, it spiked up from that weekly buy, that it fell down on that weekly buy. And now it's going back up on that weekly buy, and now it's kind of flirting for the last couple of days in a sell again. And that's why you see over on the J4X, you got that one red already developed. Here we had about three dots of red, and now we're having a volatility signal. You see this is trying to turn up, and over on J4X, you see this is still just heading down a little bit. We'll have to see in a couple hours to see if this thing starts to turn up. And the weekly doesn't look too damaged. We got the green line banging against the time manifold, so there's not a lot of weakness appearing. It's just a mild amount of weakness. Nothing major there. Now let's jump over to, I just took a sip of the tea. It's getting cooler, but it has a lid on it. Let's take a look at, on J4X, let's take a look at natural gas in Europe. It's come down from 38 down to 22 yesterday, which is really good. I'm really glad to see the natural gas in Europe back off. It makes it tough for people to live. Now it's perking up a little bit, but boy, look at all that red. And you can see here we're way down here at the bottom from it all. And we're hoping that it stays down here. We are getting another cold snap here in the States. I don't know what's going on over there. I know that they had some problems in England a couple of days ago, and I'm sure that that's bouncing all over the place. Let's see, what else can we say? I guess the energy side of this is telling us that at least the natural gas has come down. It's in the 23s. It was at 38. Not bad, whereas in the United States we got up to 6.5, that's all. So we don't have the same issues because we are the world's largest producer of natural gas. Mr. Biden is blocking that also at the same time. He's been trying to slow our natural gas production down. You got to wonder who works for Mr. Putin. We know Mr. Trump did not, but the Democrats claimed he did. But you got to really wonder, does Mr. Biden work for them? All these things happen when Mr. Biden has some type of power. It seems like Mr. Putin does really well financially. You got to wonder if that's a love-hate relationship there. Okay, let's move over to, let's see, so that's the European natural gas. So I guess we're done looking at the natural gases. Let's take a look at, we did look at the metals. Now we've done the natural gases. So let's take a look at those stock indices, and we'll go from there. We'll go to the NQs, which is the NASDAQ 100, or we call it the USA Tech Index 100 here in the on Dukascopy. You see there it's trying to bounce up a little bit after this big long slide from all this noise coming down from the 16,500 area down to the 13,500 area. And let's see what it looks like over on Chicago. Right there. You see here we are flirting with a weekly buy after all those weeks. Going into the weekly sell up in the, where was it? It was up in here. We went into a weekly sell before, did the first little slide of it right here in the 16,500 area. Then we jumped into a buy for a week, and then we went right back into a sell again. And so you can see that pressure is been on it, from the 16,000 area, and we got down to yesterday. I guess it was Monday, Tuesday. We got down to 15.8. I don't see it on here anymore, but I saw 15,000 and 13,580 was the low. And then what else we got going on here? I guess that's about it. Let me just give this a refresh just for interest sake. There it is. There's that 15,000. They're showing it as 13,710. I saw 580. I'm not sure why I'm not seeing that. But anyhow, it's trying, and you can see here the little flirtation. Now it's, oh, okay, since we refreshed it, it's pushed back into the minus. So we can remove that little circly thing at the moment, since it's back into the minus side of it at the moment. And the daily is having its issues. It can't get going there. And then you can see same thing over here on J4X. It's just flirting with a little teeny green right there, and the white line is trying to turn up like it is doing over here. All right, last but not least, we'll check out the next couple of stock indices. There's the S&P 500. We'll give that a little refresh also. And that's holding up over the weekly with no problem. And the daily is trying to lift. We'll get rid of that line because now it's backed off since this morning. Move that like so. And but that's impressive that the weekly is trying to lift. Let's see what it looks like over on J4X. Right there above it. There it is. And S&P's being firmer than the other. Now, remember, we talk about it here, and we inform you here all the time about the fact that the Tech 100 is very interest rate sensitive. And so when we see weakness in it, what it's trying to really tell us more than anything else is that interest rates are not necessarily going down. It's trying to tell us that interest rates want to go up, and that's what the pressure is there, and that's why we see that type of action there. So it's something to always remember, whereas the S&P 500 is less influenced by the interest rates than the Tech 100. And then obviously the Dow Jones Industrial Average right there is even more less influenced by those interest rates. And we can remove that too, because since this morning they've started to statistically back that up. And at the same time, we're just up a little bit, not a lot, and that battle is going on. It really is, where they don't know if they want to get going or they don't. And I'm going to look on here and see if Dukascopy has it, to be able to see where what the Russian stock index is. And we'll see if we can find that, because I find that fascinating. Let's see, where is that? Here, let's find the Dow Jones Industrial Average right there. Now, we don't see a little green developing there. We do see the white line trying to pierce here, and we're down at the lows of the lows, so that's no surprise. But we're seeing, this turn up, but it's not through the zero yet. All right, now let me do this. Let's look up what the Russian stock index is, and let's see, where's that? There. What do we got going on here? Something's going on. Oh, okay. All right. Let's take a look at I'm going to look up the index unless someone knows what it is. And Google, and I understand it was up 6% yesterday. So let's see. Moscow stock index. MOEX. Find the latest information on MOEX, Russia index, including charts and so forth. Let's see. Let's just click on that to see what that does. It's up again today, trading in the 3,000s. I can see that. Let's just do a 1 month. Let's do a 1 month. Making an interesting bounce there. Okay, let's see if we can get it up on J4X. MOEX. Let's try that again. Let's see what else. Russian index. How if I just put Russian index in there? Russian index. Once it gives us a euro. MCX. Let's try MCX. MCX. What is that? That's a Hong Kong thing. X. MCX. And it's priced in rubles too, which is pretty cool. Let's see, I don't see anything else. Real time. No. We'll just do the MOEX again, see what that does. No. No. All right, well, I see today the Russian Federation, or the Moscow index, is up 47 points, up 1.5%. So Mr. Biden is not exactly punishing them on any level. And I guess that's classic Biden, being incompetent on every level. What can you say about the guy? He's got his State of the Union next week, like next Tuesday. That's going to be really weird. He's going to sit there and tell us how great everything is. It's going to be too weird for that. Let's see. AI warns. No, that's not it. IMOX. Let's see if that does it. Let's just go back to I. No, I don't see it. I am. Try that one more time. And then we'll call it quits for the day. IMOEX. Yeah, EX. No, won't do it. But anyway, I can just tell you it's up almost 50 points for the day, so that's not too bad. All right, this is Doc from North America. We will catch you all again, same time, same channel, tomorrow on Thursday. So happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, later, traders.